Active Investor here, bringing you another independent analysis. And this time we're taking a look at Akamai Technologies, ticker symbol AKAM. The chart we're looking at today is a one-day chart, each candle representing a period of one-day trading. So this chart actually goes all the way back to December, all the way back to December 27th even, where we made that high. And the next area with that low is February 8th. So the high I'm talking about, of course, being right here, and that February low being right here. So I have three trend lines I want to take a look at before we get into anything else. This trend line coming all the way down, and it tested a few different one-day candles here on the way to that February low. And then what looks like happened was we had an earnings report, and it looks like the earnings were beat, and the candles just pushed right out of that trend line and erased that trend line. So we were really in two downtrends. We're in the overall downtrend, which we're still in, and then we had that lesser downtrend that followed us all the way into February. So we broke above that one, so that one really doesn't exist anymore. But we're still in an overall downtrend from that high of December. Confirming that is this red line here. That's the 200-day moving average. That 200-day moving average, if you're going long on a stock and you want to see it running, you want that red line to be under the price per share. You never want it to be above the price per share. And even more so, you don't want that 200-day moving average to be above all the other moving averages, which it is right now. So that's not a good sign at all. Now, let's take a look at the last trend line that I'd like to mention, and that's from the February low. So this February low trend line is pretty weak. The only candle that we have testing it really is the February low itself, and then the most recent candle, which happened on Friday. But the significance of those two trend lines is the fact that we have formed this wedge formation. Now, before we go into further discussion about the wedge formation, I would like to just take a look at another pattern that happened here on the chart, and that is from the February low. So we have a classic pattern here called a flagpole, and this is a bullish flagpole. What that means is we see the price run up in a couple days, a rather shorter period of time than the overall trend itself. And then we have a period of consolidation, which occurred right about here. Now, what does that mean? That means that the bulls couldn't really hold the price and continue that run. It consolidated for a while, and then after the period of consolidation, you'll either see a break to the upside or the downside, and unfortunately, it was a break to the downside. Now, luckily, we have some good areas of support right around $51 and $53. That's what these blue lines are. These blue lines are my pivot points. What that means is they were areas that acted as support and then became resistance, or vice versa. So we have support, which is now resistance at 51, and we now have resistance at 53 and resistance at $58. So what do I want to see happen here? I want to see a few different things. I want to see, first of all, I want to see this trend line from the February low hold. And if that does hold, we will be slowly working our way up to the $51 area, which we're really not too far off right now. If we break $51, that should turn to support, and then we can work our way into testing the $53 of resistance and hopefully turn that into support as well. Now let's go back to what I was talking about earlier regarding that wedge formation. So as we get closer to the end of the wedge here, that's going to indicate that we are more likely to see volatility in the price. Now, let's assume that the volatility is good. By the time we get to the end of that formation, we will have made $51 into support. And if that does indeed happen, we will be testing $53. And if we have that period of volatility, we will probably break $53. And that means my price target would be $58. So assuming that we do get more bullish here on the chart, I think it's very reasonable to say that we return to the $58 area. And the good news about that is there's no real resistance. We have a little bit of resistance here around $63, $64, but it's not strong at all. So assuming we break 58, we can test 64, and if we test this, if we break above 64, which shouldn't be that hard, we could see a gap up all the way to that $70 area from December, and maybe even that $76 high from December before we really fell off in the start of the new year. Now, alternatively, if this trend line doesn't hold and we break it to the downside, my next area of support is all the way down here at $56. and it's not really strong support, honestly. It's not the strongest support at all, and that might not hold, but that would be my next price target if we do break this trend line to the downside. So just to reiterate, we'd be finding support here at $46, and we find resistance at 51, 53, and 58, and we could break these areas of support and turn them into resistance, so it's not really all bad. And the closer we get to the end of this wedge is going to signify that we are more likely to see volatility in either one of those directions. Now, some of the good news is this last candle on the one-day chart is pretty bullish. It closed right at the top, so that's a good sign. Further confirming that candle is the relative strength index. You can see that we are oversold, which is not good, but it's starting to curve up. So if it curves up and pushes out of the 20 line, the next thing I want to see is a break to the 80 line. Once you get above the 80 line, that gives us potential to see a run. Let me show you what happened the last time we stayed overbought for a while. So I'm going to draw a line here and a line here. The last time we were really overbought, and that's when we saw that run up after earnings. Now, once that overbought area was broken, that's when we saw that period of consolidation. And after that happened, we really didn't go overbought again at all. We kind of went overbought here, we kind of went overbought here, and we kind of went overbought here, but it didn't really stay overbought at all. And as a matter of fact, it fell off to oversold real quick at that point. So let's take a look at the last two areas where we went overbought. You can see that this overbought area is lower than that overbought area, which indicates that the trend is down, which further confirms the flag pull that I was talking about, where we saw the run up, then the consolidation. When we broke down and had the overbought area, when we broke down and that overbought area also broke down, that's when we saw this downtrend start, and we consolidated down to this area of support, and we even broke that, unfortunately. But like I said, if this trend line holds, everything will be okay, and we can start working our way back up to that major $58 area, which would be the most ideal place for the stock price right now. Now let's take a look at the moving averages. We've already taken a look at the 200-day moving average, and we don't want that to be above the candles or the other moving averages. The orange moving average, we don't want to see above that either. And the good news is that the orange moving average, that's our 100-day moving average, is still below the 50-day yellow moving average. So we can start seeing the blue moving average work its way up along with the green moving average, and ideally, as those work their way up, the orange and yellow start coming down, and that red starts coming down, and our candles start working their way up. If we do indeed hit that $58 price target, that red moving average will absolutely be below that $58 area, and everything will start falling back into a bullish formation. But as this chart is now, my sentiments are neutral on Akamai technology. I would not be buying this right now, but if you do hold it right now, it's not really the worst looking chart. It's not good, to be honest, but it's not the worst looking chart in the world either, and it is starting to leg up. But this trend line really needs to hold. Otherwise, you're looking at a potential drop all the way to $46 from about $49, and that's a pretty significant falling off. There's no support anywhere until $46 if that trend line breaks. So hopefully it does hold and starts working its way up to 51, to 53, and then to 58. So those are my sentiments on Akamai Technologies. This video was actually a request from someone very special to me, so I hope this video helps them out. And for anyone else that's watching this video, I hope that helps you out as well. If you have any questions or comments, please leave a message, and I'll be more than happy to get back to you. And if not, I'll see you in the next video, and I'll talk to you then. Take care.